Peter Curk, welcome to the Real Wealth Podcast. Thank you for joining me, and I really appreciate you giving us some of your time. I know you're a busy man.
Yeah, thanks. It's a
Well,
pleasure being here with you.
I think the natural place to start is, can you tell us a bit about your your background and your journey into crypto now, and ultimately how you became the CEO of Iconomi?
My business history is not related to finance. I started out in commercial side, like CRM stuff like this, really on the business marketing and sales side, and then through the years grew into management positions and worked for the 5 billion companies, the corporations, and so on. But somehow didn't feel like that's the place I really feel at home. So I then moved into managing more small businesses and took over Iconomi as a CEO like 2 years ago or a bit more. Although I've been investing in crypto since 2014, and I've always been interested in the space because I have a very, very heavy, I like digital innovation. I like digital stuff. So I've always been on this data and digital side of all the businesses that I worked for and invested in. I also managed a small medical startup in between. So a lot of different experiences, I would say, from a business perspective. That's today.
I mean, how did the kind of transition from more kind of corporate environment to managing a startup and be involved at the ground? How did that feel?
Um, Somehow it didn't feel really anything special, but let me also point out that Iconomy is not a startup anymore. We've the company's been established 2016. In 2021, we got an FCA registration for doing crypto. The platform was launched 1 year before. Sorry, 2 years before. So we are far away from being a startup. We are actually more of a scale up. As I was just chatting with you before, we just expanded into European Union last December. So it's more of a using my management experiences and the stuff that I learned into organization and corporations that maybe have more structure, have a bit more of a management system in place and stuff like this, and then applying bits and bytes of that at the scale up, which is still relatively very small to the companies that I worked for before.
But you mentioned, you were involved in a startup in the US for a bit.
Yeah.
So there must have been, you tend to find a lot of people that come from kind of more corporate world to being involved in a startup. Albeit economy is not a startup, but I'm talking about the US one, where it's a bit of
Yeah.
a baptism of fire because you're involved in so many different aspects of the business, and roles are not as clearly defined.
Yeah,
It's
yeah, I totally agree. Maybe this is something that personally is also suits me. It's because I'm a learner by default, so I like to learn new things. And Having seen so many different industries from retail to energy to telecommunications and so on before, I then somehow can apply all this experience, I would say, to managing economy. But definitely for someone coming into a smaller organization, small business, you have to perform. So it's not, there's no backup, it's there's you and there's no backup. You're not part of the
there's
team.
no hiding,
Yeah,
and
yeah. There's no hiding in the bushes, so somebody else will take, will catch the rabbits or whatever. No, it's you. You have to go there and you have to deliver. So it's really, I think, also stimulating in a sense and invigorating
yeah.
because it's simply, as you said, it's there's no hiding.
And the reason I draw on that is because, obviously we speak to a lot of entrepreneurs who are starting their own business. And, I think that, even working in, transitioning from a corporate environment to working in a startup, it can be such a great development of your skills and capabilities because you have that diversity in the role, and you just kind of have to muck in and get involved. So you tend to find, as either that business scales or you move on to the next bigger project, you've developed this whole bunch of skills where you kind of understand the mechanics of how the business works from various different aspects, not just that strict corporate role you may have had in the past. And I guess that's been contributor to you being able to go on then and take up this CEO role, which is, going to involve a huge diversity of tasks and departments to manage and all that.
Yeah, yeah, definitely. Definitely. There's also like, I guess with all things in life, there's also a bit of the X unknown factor involved, like specifically with Iconomi. Iconomi was founded by two colleagues of mine. So we remained always in contact and so on. But they are more of the guys who started. They are the early builders type, and they were mature enough to realize, oh, this is something we cannot simply have enough focus on. So they moved on to their own stuff, and then simply created a great transition to somebody stepping in and then managing the business, which is basically becoming a regulated financial institution. And maybe this way we can also touch the core of economy's business. So we deal with crypto investments, and the general public perception that crypto is the Wild West, nothing is regulated, you can do anything. That's very, very distorted at the moment. Crypto investments have become highly regulated industry. We see this in Europe, where we expanded when there's a licensing regime stepping in the 1st of January next year
Yeah.
throughout the whole European Union. And we also see this with already in the UK with the financial promotions rule applying to us from last year, mid last year. So the transaction monitoring, and all the AML checks that we do, and stuff like this. So the FCA has been really uh, fairly fair and tough on, but it has imposed those rules already, I guess, since 2021.
Yeah, I think it's a really important point for people because that there is, I guess, a lot of people out there that are a little bit reluctant to get into crypto because one, they don't understand the fundamentals of a lot of it. Two, because you see these documentaries on Netflix like
Yeah,
Bitcoin, stuff like
correct.
that put the fear into people, and a lot of people starting out on their investment journey are naturally quite fearful anyway. It's a big move to make that first step, to take that first risk, and it is probably one of the more complex investments to understand if you're not if you're not in the day-to-day of it. So how does Iconomy help people understand more about crypto investment?
Yeah, so beside the fact that we have a very strong community that posts daily posts updates about what's happening, and these are experienced investors. We also have a very strong blog section. But I would also come back to the fact, as you said, the crypto investment industry is now split into three basic, let's say, major categories. I would call them the regulated, registered, authorized businesses that work with in hand with the national regulators. And that's, for example, Iconomi. I think there are around 45 to 50 businesses in the UK that have a registration with the FCA only.
Yeah.
So it's not like hundreds of them. There are like 50 companies in the UK that have registration with the FCA, and we can legally do it. Economy is one of them. Then there is the DeFi space, meaning everything happening on the technology chains that and the protocols themselves. So it's kind of totally decentralized. There's no central authority there. So it's also impossible kind of to regulate, but it's still legit technology-driven protocols on a blockchain that then offered various services and ways to make money. And then there is the black gray space, which kind of try to hide from the regulators. And there are still some players in there. So I would still advise users to really go to the registered businesses and crypto providers and not try, to make big money from some coins, tokens,
Yeah.
projects, the neighbor from the street, behind your street
Mhm.
that is not registered. If their business is not registered with the FCA, I think the users should be really, really very, very careful about approaching and especially investing.
Yeah, I mean, if people are not doing the front end due diligence on this stuff, you run a really serious risk if you're getting an investment and not being asked to do basic things like the anti-money laundering checks, and there are things that can indicate very early on in an investment journey whether or not you're dealing with a legitimate business
And
or
in
not.
the UK, you can also check on a FCA website.
Mhm.
You go there, you check the business, and you will see if the business is registered for doing crypto. So if it's not, most probably it's running it in a kind of you know, questionable way.
Yeah.
Also other routes people can run such a business in the UK, like through some agencies that are authorized by the FCA. But yeah, this front end due diligence, like to know whom you are speaking to, these people they're running a legit registered business, yes or no. These are the simple basics that I think today
Mhm.
should be done. Yeah.
I understand that or I think I understand at least, Economy works on the principle of connecting, professional crypto traders with people who are looking to understand the market better and looking to invest, so they can, jump on the bandwagon, so to speak, of the strategies that these professional traders are working on. Is that broadly speaking
Yeah,
correct?
that's broadly speaking correct. We on our platform, you can of course, I mean, a user can of course buy and sell certain tokens, but I think the job that the economy does starts earlier, a bit earlier than what you said. It starts with just listing and having very strict policies about which coins to list.
Mhm.
Meaning, we do really thorough due diligence on the coins that are on the platform. Today, there are like tens and tens of thousands of crypto coins that a person can access. Um, but there is the legal check, there has to be a compliance check, and there have to be, most importantly, a fundamental and liquidity check. So a token can represent zero, like the meme coins, or it
Yeah.
can really represent and have some intrinsic value by being there's a development community, there's some business that generates some revenues already, and there is some legit trading going on with this coin. It's very easy to buy a token, but if you want to make money, you have to sell it, and you have to sell it with a higher price.
Mhm.
So to sell it, there has to be liquidity. So somebody else has to be willing to buy it. And just the economy, for example, we connect with multiple trading venues, and for a coin to be listed with us, it has to be present on multiple venues. The volumes of trading daily have to be at a certain levels. As I said, we don't want investors in crypto to, buy a coin and then not being able to sell it, because then
Yeah.
it's just money gone. So this is one of the roles that we fulfill as the platform. And then, as you said, there are investment strategies on the platform that are run by more experienced traders that have been in the space for like 10 years or more. And
And you have to vet those traders as well before they go on the platform.
correct. Yeah, correct. We monitor their performance, we monitor what they do, we monitor how they communicate with users. And we also have some rights to simply disconnect them from the platform and so on. So we do a lot of customer kind of protection and due diligence that a non-experienced user is not most probably able to do.
Mhm.
And then there are these strategies. Yeah, as I said, there are index strategies, there are more aggressive strategies, different investment strategies, all simple like buying and selling Bitcoin that everybody, I guess, nowadays already knows. Um, that's basically it. And we offer this for retail users as well, for example, high net worth individuals, which can access a special section of the platform called Iconomi Private.
Mhm.
And in there, they have a bit different experience and a bit different fees and stuff like this. Yeah.
So, in this role, do you see Economy essentially as a facilitator? Or does Economy also have its own investment views and strategies that it puts out there, or it's more just facilitating the connection of these various
I
strategies?
mean, we do perform checks. Sorry, just my throat. we do perform checks, risk checks, liquidity checks, activity checks of all the strategies that run on the platform.
Mhm.
So in a sense, we are kind of, we cannot guarantee, but we kind of vet and monitor daily all the coins and all the strategists and what they do, and only
Yeah.
the ones that basically retain a certain quality of their strategies based on performance, based on some other criteria, then those strategies are listed and become public. A user that just comes to the platform can stay private and nobody else can invest and copy his investments. But if this investor is basically passes all the tests that we have, then his strategy can go public and other people can copy it. There are
So,
also some more, I would call them systematic strategies on the platform that are index strategies, like, the blockchain index. It has been running since 2017. It
mhm.
has like more than 10 million pounds in it that the people are. So these are more systematic type of strategies that just simply follow the whole market or part of the market, like a DeFi and so on. So there's really a plenty of choice, but the end decision is always left to the user. So to decide what what kind of investment does he want to make, and the end user is the only one who actually can move his own money left and right on the platform. Yeah.
So, when you think about more traditional investment equities, etc., and you've got guys like Warren Buffett, whose view is more find an underpriced asset, buy it, and hold it for the long term. Does that, given the volatility of cryptocurrencies in general, does that strategy, is it kind of null and void when it comes to that? Is it much more you have to be focused on trading and staying live rather than putting your money in one place and holding it for the long term?
Yeah, I can share some stats from the platform. I mean, we can see that the investors on our platform that have a more mid to long term view, definitely uh the percentage of them that is a winner, basically it's made money,
Mhm.
returns, positive returns, compared to the ones who have more short-term view, like, speculating about, oh, I'm gonna buy this coin and just selling.
Yeah.
So this mid to long-term view is also reflects in crypto assets. So these investors that buy when there's a down cycle and then sell in a couple of years, maybe 10 years, 6 years, 4 years, they tend to have higher profits, and the percentage of them that is in plus tends to be, no, tends to, it is much higher than for the ones that take a short-term view. This is like always, it's very hard to speculate and have, there are a lot of, maybe I can share some anecdotes because we some time ago, a couple of years ago, we were approaching also some of these guys that you can see on social media that post how much good trades they're making and stuff like this. So let me call them social media crypto influencers, traders. But most of them never wants to go public with our and say, because our page was very simple. Oh, come to our strategy. I mean, our platform, do your trades publicly, like
Yeah.
publicly, like so others can copy you. But most of them never does that. And I'm talking, when I say most, like it's 99% of them never decides to do that, because it's really tough, to be a good trader. There's a lot of psychology involved, and once there's real money involved, then all our, mind starts kicking in. So the games that our mind plays with us. So these social media traders are usually not that good, because if
Yeah.
they were going live public on our platform, their performance would be recorded, and then people would be able to see not only the good trades that they most probably share on social media, but also the bad trades they made, and then that
The
actually
net position of where they're
exactly
actually at,
exactly. So
it's all.
yeah, just trying to say that we are an investment platform, not a trading platform, although there are also trading, and our technical capabilities to execute trades are really high, and I would say state of the art. But there are very few high, not high frequency, but there are very few traders that active trade a couple of more than one trade per day. that are very successful on the long run.
Yeah.
There are streaks of good trades, but on the long run, I guess crypto assets should be seen as very early stage investment,
Yeah.
besides from being on the market for a lot of time, but still very early stage and mid to long term investment view. Yeah.
I think that's the challenge. And when I had previous conversations on crypto on the podcast, I guess one of the challenges of it is it hasn't been through very many economic cycles to see how it's going to react. So I was asking specifically about Bitcoin, where we talk about it as like a digital store of wealth and the equivalent to digital gold and the way that it's formulated. Um, does that then mean that, like gold, when the economy is not doing so well, Bitcoin's going to do well? Um, and the answer kind of seems to be along the lines of we don't really know yet, or certainly that's the answer was given at the time because it's not been through those stages, those cycles. And furthermore, they said, it acts almost more like a tech stock, you know,
Yeah,
in terms of how.
the correlations with tech stocks have been quite high over the past years. And as you said, it's I guess the first time that Bitcoin is going out of the monetary is changing the cycle of the monetary policy. For it's been like 2 years now that it's been in a tighter monetary policy environment. Um, so it's going to be, I guess, the first time that it's also going to be going into maybe a different, yeah, for a different cycle that it was in the past. Because, but maybe also worth mentioning that there's a huge difference between Bitcoin and now ETH or Ethereum that have a US-based approved ETF compared to, for example, all the other coins, yeah, which
Altcoins, yeah.
that's yeah, simply because the US market is very relevant, and when an asset or a coin, a token is approved, has an approved ETF in the US, these are huge sales and distribution vehicles. Eh, People know how to buy an ETF and retail investors, so it opens up the whole asset class to this retail investors in a way that it's much harder before that. And
When did the Bitcoin ETF come in? Because
it
that's
was
fairly recent.
January this year. Yeah, and there was a huge rally then in the first quarter. And I think the ETFs were just approved, I think, July, so last month. So these are the only two tokens that have US-based approved ETFs. There are other markets where some ETFs have been approved, like Hong Kong, Canada, Singapore, different markets, but the sheer volume of sales and inflows from the US market in those ETFs makes a huge difference. Yeah.
When we talk about Bitcoin and the fact that it's went up 102% in the last year, how much of that do you think is attributed to the ETF and how much of it's attributed to the halving?
Usually the price change for the halving happens a year to a year and a half after the halving. So uh, from this, making a deduction from this, I can just assume that most of it was from the because of the ETFs and
Yeah,
the inflows. Um, the Bitcoin price is also very much influenced by how much coins that they are being liquid, I mean actively traded on
traded. Yeah.
on on the market, which is relatively low. But there was over the last couple of weeks there was a correction in place. So um, there were a lot of inflows from institutional clients, while I think the short-term holders, so the ones that were kind of speculating or they had bought just over the last at all-time high over quarter one, I guess, or quarter, they were basically under pressure and selling. Yeah.
So the ETF is quite a fundamental change, if I understand it correctly,
Correct.
because
Yes.
does that not then mean, like you say, these institutional investors, pension funds, etc., can then start to access cryptocurrency investment?
Yeah, this is still there's still a process going on. So once the ETFs are approved, then every asset manager has to change and review these ETFs, these crypto ETFs or Bitcoin and ETH ETFs in their investment policy. And only after this, financial advisors slash wealth managers then say, okay, we will now change our investment policy and also advise our clients to put money into crypto ETFs. Only then this whole process starts. And so I think it's now what's now going on is, so there was a first, let me call, group of asset managers that was ready, and but now every other asset manager in the US is reviewing these policies and opening up potentially his client base to invest in there. Yeah, the fact that an ETF exists is not necessarily means that everybody is advising their clients. So I think the process of being approved is still growing out. At the same time, we are more and more getting away from the halving, which means, I guess, somewhere middle next year, if we would simply follow the halving cycles and market tops. Maybe 2025 is supposed to be the year where the halving would make most effect.
So is it your expectation that Bitcoin is going to do quite well over the next year?
Uh, I don't like to do this. I can comment on our financial projections for the company. We expect a bull run to happen be somewhere. I'm talking about our business plans, somewhere before middle of 2026.
Okay. So going back to Iconomi, is there support on the platform that helps educate novice crypto investors on how to understand things like the blockchain and how transactions work on cryptocurrency?
Yeah, we have a very strong blog section with weekly wraps being sent out to all users. We also do webinars, sometimes also in-person events, live events. Um, so I guess it's a good starter. So also to get accustomed to, the jargon used in crypto. So there's a lot of, words being used that are a bit specific. So I think that's the starting point for anybody, and then of course just registering on the platform and following the social feed where other traders and investors post their own analysis. So just by following that feed, somebody can start learning, start getting some learning points, getting some ideas what else to read and where else to also get informed about certain topics that are specific to crypto and blockchain technologies.
I definitely think that's the biggest barrier for a lot of people to get over is, just a lack of understanding of what crypto is and how it works and the premise behind a lot of it. Certainly the people that I speak to that are really excited by the potential returns of crypto investment, but just terrified of making a mistake, and everybody has got someone they know that's got a bit of a story about, they invested in a coin that ended up being an absolute nightmare, or there was a platform that scammed them out of a bunch of money. So, I think the educational part was really important, right? Just to get people over that first hurdle and understand the opportunity. Because for me, the fundamentals, particularly with the fundamentals of Bitcoin, I am seriously concerned about the currency system in the UK. Since the 1970s, Nixon went off the gold standard. There's nothing tying our funds to value. We're printing money for fun. During COVID, it got completely out of control. Then we've seen inflation go crazy. Ultimately, our currency is only as good as the government that issues it, and the UK government is massively insolvent. So, I'm concerned about it, and I'm also concerned about the potential for a central digital currency. We see all these kind of dystopian views of what the world could become. It's scary, and I think for me that makes it even more important to start looking at things like cryptocurrency and diversifying some of your wealth away from these government jurisdictions that don't aren't necessarily going to be stable in the long term.
Yeah, in the history of fiat and governments, we've always seen, I mean, there's been repetitive cycles of where the fiat currencies either failed or, they were devalued and so on and so forth. So that's nothing unexpected. I mean, we would be fool to expect that this would not happen. Anyhow, I think we have a blog post about on our website about how much it was 10K pound 10,000 pounds worth like uh 50 years ago, and and what's the real purchasing value of those the same amount, just because of the let's simplify it, but because of the printing of the money, and so on. So I think in a sense Bitcoin has with the approval of the EDFs in the US, Bitcoin has maybe touched the threshold of becoming a new social agreement. Like if I turn it a bit philosophically, like saying, okay, you can have different ways of storing or buying your and storing your wealth. So there's gold, as you mentioned it, the traditional gold, but there's also the digital gold, which is Bitcoin is pretty much associated with. While Ethereum, I would see it more as being a kind of a top 500 Standard and Poor's index, because
Mhm.
Ethereum is a layer one network on top of which a lot of different startups are innovating about services,
Yeah,
and there's generating already revenues, and they have a positive yield. It's currently the size, I know it's currently, I guess, the size of a mid-sized European country like maybe Austria, or I don't know, let's say Netherlands, something like this. So
yeah,
that's the size, the
huge.
volume of revenues that Ethereum as a protocol generates, and then gets distributed back to the token holders, basically. So
Yeah.
there is already revenue being generated, while with Bitcoin it's more of a commodity stuff. Yeah. Um,
And I guess, the challenge remains, well, my understanding of Bitcoin was, was originally designed to be, a transactional currency where, you you know, frictionlessly do transactions intercontinentally, and it helps with that. But it's become more of a store of wealth because transactions are very slow on the blockchain, and ultimately the price volatility is still massive, so it acts more as an investment vehicle rather than a
yeah,
transactable
yeah.
currency. Are there other coins that are kind of trying to deal with that and
Yeah, I
create
mean, I
something?
think I think that part of the promise was fulfilled by the stable coins, like USDC, USDT, so Tether, and the other stable coins. So if you think of the non-banked populations in the other, so for example, like I was recently traveling a bit, and I passed through Istanbul in Turkey, and in there, you have 300% the yearly inflation. People there are not using cryptocurrencies for investment vehicles. They're using them to protect just against losing money. So for them, even if it stays same value, just so they buy a stable coin. For them, it's good enough because they've not lost most of its value because the local fiat currency is devaluating so fast. But coming back maybe to the business that you run, or yeah, the real estate and property business, as I was telling you while we started the call, the podcast, I think the combination of investment in real estate properties, which have a very long and slow, let's call it slow cycle, with crypto investments, it's actually a very good combination. Yeah, compared to, for example, the usual 60-40 type of investment portfolios that have been kind of the standard, like 60%, let's say bonds and equities. So I think real estate compared and property compared, and together with a portion of wealth in crypto, Bitcoin, starting with Bitcoin, is quite a nice and interesting strategy, because it very much increases a lot the potential returns. While if the portion of crypto is capped to single digit percent in the portfolio, it's still, the downturn is potential downturn is relatively small. So there are also some studies being done about what does it mean to add, for example, 4%, 5%, 3%. of someone's wealth to Bitcoin and adding that to the overall portfolio. But I think these two asset classes are really interesting, and I think make a great combination. Um,
Yeah, and we do have several clients that are, heavily involved in property investment, but are also, heavily involved in crypto, and some of the returns in crypto can be staggering, but to have that diversity of a slightly more kind of long term stable-ish investment in property
But
is of
as in
interest.
any other asset class, I would like I get always get questions like, "Oh, is it now a good moment to buy? When should I buy it?" And I would just simply say some of the worst things in my investments in crypto were done when I sold it too early.
Hmm.
And the second thing, I think someone should really approach it very, very rationally.
Yeah.
It has to be part of some how to allocate a portion to my investment portfolio to an asset class decision. Meaning, it starts with, will I involve this? Will I invest in this asset class? Yes or no. If it's a yes, then okay, how much? I mean, the percentage. What kind of expectations and place I'm gonna give it into in my portfolio. And then when you go through this, I think with crypto, what is also very important, maybe I guess with all other classes, is to define the rules of exiting an investment. Meaning, once I've invested, for example, 100K in crypto, and then I start seeing the charts going up and then the volatility going down, your emotions will kick in and it's going to be too late. So people get panic, our mind starts playing trick on us, and it's been scientifically proven that it's not a good, it's not a good mindset to make sound decisions. So before investing any money, but once someone has done his decision to invest in crypto, I think the take profits strategy is key. So meaning how much crypto I'm gonna sell at which point when I've already done some profit. And then this is also something we are really pushing a lot on the platform. So for all the users to create their own take profit rules
Yeah.
and,
Yeah.
and apply those rules to their account before they've even invested, a
Is
serious
that
money.
something that's automated on the platform?
Correct. Yeah, correct. It's one of the key features we're also now suggesting to the user, set up your automated take profit rules, meaning if it goes up X, I'll take Z out of it. And this way, but what I'm trying to say, it's really important that an investor does this and sets up this at the beginning, not, after 3 months after the charts have gone up or down, because then it's already too late because we are
Emotions have kicked in. Yeah.
exactly, yeah. So I think the process of investing crypto should be do your due diligence on the provider, that it's a registered provider with the FCA or so on, allocate a certain portion in your portfolio, then of course time scale and the take profit rules, because it's very, very hard to time the market and just sell it at the right moment.
Mhm.
And this is also then the answer to when you should buy it. I recall a call from a friend. He was just expecting. He's a businessman, a business owner. He was just expecting some bigger money to come in from a deal he did. And then he said, "Oh, it was too late. It came on Saturday. The banks were closed. I could not buy." And then Bitcoin went up, 7% on Sunday. And I had my money in the bank and whatever. And then I told him, "Come on, man, are you investing for like a week
A
or
week.
for
Yeah.
how long? Yeah, or like if you made the decision yesterday, you didn't want to sell it on Monday. So this sudden price movement should not change all your
Anything.
thinking about or your investment. Stop behaving irrationally. So make up your mind. Are you gonna go in for the weekend or are you gonna go in for the midterm? So if it's for the midterm, then maybe a DCA approach is better. So when somebody allocates the investment, then it should just split it into maybe equal parts and just DCA in, meaning buy maybe each week or each third week or each month, depending really on the personal situation and so on.
And I think that goes back to the sort of Warren Buffett philosophy of you know, looking at an asset, agreeing that that's what you want to invest in, and agreeing, the specifics around that. Okay, he's holding stuff for the long term, but I even look back at something like investing in the S&P 500, and I've got a Vanguard account that kind of automatically puts money into that, and if you look at it year on year, there's going to be big fluctuations, but you look at the S&P 500 from the 1950s, and the average return year on year is like a CAGR of around about 11% over time, but you still would have seen a swing down 20% one year, up 10% the next year, and it, you put your plan in place, agree what you're going to do, and the best situation is just to sit back and don't mess with it.
Exactly. So sometimes we can see this. I mean, it's ironically, but the guys, there were maybe you're familiar with MTGOX. It was one of the earliest exchanges, and it basically got hacked. But nevertheless, there was some crypto Bitcoin left there. And now, after more than 10 years, these assets have appreciated in value so much. These investors, by being forced to stick with the insolvency process and everything, they will still be making huge amounts of money
Wow.
out of that. But, and so just trying to say, um, I'm also okay if somebody decides, oh, I'm gonna actively trade crypto. I'm gonna go in and I'm gonna actively daily trade it. But then I think somebody should be aware of and be really an educated trader and have some experience. So if not, if somebody is just looking at crypto as a potential investment asset class, then I guess the approach that I spoke about before, it's much more appropriate.
I think it's just, and it's true of property as well. You need to decide what it is you're going to be, because a lot of people, get into this type of investment to try and, sometimes it's wealth creation, sometimes it's just trying to replace an income from a job. Property is always discussed as this sort of place you can put your money, rent out the property, and get income quite passively without having to do much, because you have an agent managing the property. But conversely, people that go in to do property flips, where they're buying properties or renovating them and they're selling them on, you're very actively involved in that trading activity. So effectively, what you're doing is buying another job, another thing that you need to hone your
Yeah, correct.
skills on, understand it, know the ins and outs, pitfalls, versus parking your money as an
It's the same.
investor and letting it grow.
Yeah, it's the same with crypto. If somebody really is into trading it, it's a full-time job. I mean, you have to be on it. You have to read a lot. You have to educate yourself a lot. You have to train also your mind. I mean, psychologically train yourself to become a good trader. You have to put in stuff. So it's as I said, you buy a new job if you decide to go the trading way. There's the investment way, and I think this is on the mid to long term perspective much more passive, despite the fact that, as I said, on our platform, anybody investing still gets all the updates about his investments, because social feed is about news happening in on each coin, on each strategy that there is still very much active, and it's still on the person to basically read the news and educate himself also after the investment, but
Yeah.
not supposed to actively trade it.
Mhm. Yeah. An important fundamental difference. So we spoke kind of briefly about the fact that Iconomi is expanded into Europe, and you're now in the Netherlands. What does the future look like for Economy, and what are the kind of things that you're excited about in terms of future
Yeah,
growth?
actually, Europe has gone a bit faster than the UK about introducing a comprehensive, I would say, framework. So what we did, we acquired a company in the Netherlands last December. Um, And we are now this company is licensed in the Netherlands with the Dutch Central Bank to do crypto, and we are currently just in the process of getting a full MiCA license. So the European Union has set in place a Europe-wide directive which covers all the member states, how a business will become a fully registered licensed crypto business. These rules are valid for the whole European Union, and our Dutch company is just going this process of applying for this license. So that's the very short term future goal for us, which is January 2025.
Okay.
And after we've done that, then the whole European market will be open to us. And of course, at the same time, I'm very excited about the interoperability. This is maybe more technical and stuff about the future of the blockchain technologies. As the listener might know, there are different chains and layers. And the simplest way to explain it is maybe like before we have mobile phones, but if somebody was traveling to the US, you had to have a different phone because the technology in the US was different,
Yeah.
like 30 years
Yeah.
ago. And so there was not technology wise not interoperable. So you had to change the device to be able to make a phone call while in the US, and then you came back. So now with GSM, the standard technology for communications, this is solved. Like, and the same process is going on in the blockchain technology space. So there are protocols how all the diverse chains that are there will become interoperable, which will be meaning that the assets from one chain to the other will just become very, very easy to do, which will basically become an internet of chains that is going to be completely running smoothly. While today, this is still very, very,
Yeah.
very fragmented space. And this is something that I think, from a technology point of view, will give an additional boost to the whole environment and the whole industry. While if I comment from the investing point of view, as I said, regulatory framework and clarity about the stable coins, about how to invest, what is a legit business. This is also gonna give a huge boost to the whole industry because it's simply gonna make investing in crypto as regulated as investing in any other asset class.
Are you a little bit concerned with the UK, and Brexit being out of Europe and the fact that you guys are operating in two spaces now? Are you a little bit concerned that the regulatory framework doesn't move in the same direction at the same pace and you have these two sets of standards that you need to meet?
Um, I think this is more of an operational concern than a real long-term concern, because we can see a lot of common approaches. Uh, and technically speaking, our operation speaking, we are ready to manage this. We are already now doing it. So I don't think it's a real concern. My concern related to the UK is more about um, there's been a kind of a negative approach to crypto in the UK, while just across the channel, it's just the attitude I'm speaking about. Is it like,
Yeah.
look as an opportunity, a legit thing? Okay, be aware of the scammers. So, but you start from the positive side of it. While
Mm.
in the UK, I still perceive it to be more like, no, no, it's we see this in the approach the banks take toward us. We daily get tickets in our support, and our clients call us, or potential and new clients call us or contact us saying, I cannot deposit my own money from my own UK bank to you because you are a crypto business. And we're like, I think last week we just published a blog post about this, how a user can actually complain to the FCA about these practices the UK banks their stance toward crypto businesses. In the UK, we also have like issues opening regular corporate business accounts, which are
Yeah.
not related to crypto, so that we just use to pay out salaries, pensions to our
Mm.
employees. And that's why I'm saying I still perceive it like to be kind of a bit of a negative attitude to the crypto industry that's
Yeah.
been so far. Let's hope with the new government, things will get resolved sooner.
We've seen that in the property space as well. Anytime we've had a client liquidating cryptocurrency to then put a deposit down to buy an investment property, the lawyers hate it in terms of an
Yeah,
AML
yeah,
perspective.
yeah. Oh no, it's illegit. It's no, it's just
Exactly. They just don't understand it, and
yeah,
that's
I
the
guess
challenge.
so.
That's the hurdle to get over. And in terms of the banks, I've got a lot of concerns over what's going on with some of the banks just now. We've heard about a lot of people being debanked. And there was a big thing with Nigel Farage recently where the bank says we don't want your business anymore, and it's essentially the bank taking a step into politics, which is just a step too far. It's not the purpose of a bank to get involved in political activity, just like it's not the purpose of a bank to tell its clients which types of investments are acceptable and not. And
Correct.
it just
Yeah.
seems
Correct.
like an overstep.
Yeah, I would agree on this, especially maybe just to clarify. So we as a business run so the funds of the business are completely segregated and separated, and any operations from the client funds and how we deal with investment money.
Yeah,
And I'm not talking. I would understand the bank could say, "Oh, look, we don't do this investment side of the business. That's not our business. We don't do it." Okay, but from a business perspective, we are just a regular business. We
yeah,
get revenues from the fees, and we pay salaries, services, and everything. And I would not
exactly.
expect us as a business who don't deal with crypto on this side. We don't deal with crypto. We just pay salaries from the revenues that we earn. So I would not expect the banks to basically not allow us to or not open us an account, a bank account in the UK. But that's still the case. Yeah. So
I mean,
that's why I'm saying in the European Union, it's more of a they take it from a positive side, and
mhm.
then of course with all the due, I think basically scrutiny and everything, but it's still seen as a positive.
I think it's a big feather in the cap for Iconomi that you guys started in the UK, and what is quite a difficult regulatory environment for a business that's involved in the crypto industry, and you've navigated through it. You've got your FCA approval. You've kind of taken the bull by the horns and went with one of the more difficult areas to. It would have been easy to establish the business in some offshore location with
Yeah, correct.
no regulatory framework around it, but it adds, I guess, massively to the legitimacy of the business.
Yeah, yeah. Thanks. It does. It does. It was not an easy process when we went through it in 2021.
Yeah. Um, what is your thoughts, concerns, ideas on central digital currency and the move that a lot of the governments are talking about to creating their own digital currency?
I think I heard before from you that you're a bit concerned. My view on it is like it tries the CBDCs or central bank digital currencies. I see them as being like a trial from the central authority to
Mhm.
actually create something that's already been created by the free entrepreneurial spirit and ingenuity of other protocols that already there on the market. And there's no user need for it. So the users don't need a CBDC. Users need stablecoins that are, regulated and trustworthy, and they need investment vehicles, and they need legit crypto businesses, and so on. But that's already all out there at the moment. So the CBDCs are just like, oh, let's try to do something. We from a centralized or government organization do something that's pretty much already been invented and is already there, and there's no user need for it.
Well,
So
that's
I
that that's
share some of your concerns. I'm not sure if it's really premeditated, and how far the utopian dystopian actually
yeah.
scenario it goes, but somehow I don't see any user need for it.
Well, and that I guess that's my major concern is the benefits for the user. You know, the UK population is very limited. It's hard to see any benefits from our side of things, but it's very clear to see what the benefits could be for the government, and that's where you get
Yeah,
into your more
yeah, sure.
dystopian views.
I can share our experience from the Netherlands. Yeah, in Netherlands, like I guess a lot of or most of the payments that people do go through an instant payment service called Ideal. So it's actually a service that's not running on blockchain, it runs on just traditional technology. But since it's so widespread, people mostly don't use credit cards, mostly don't use blockchain solutions for this. They just use a very useful service that it's an interbanking of basically instant payment scheme. And most of the payments, most of the deposits that we get in the Netherlands come through that. And also, I'm talking about not crypto. I'm talking about the whole country.
Whole space, yeah, yeah.
Yeah, and it runs. So why would there be any need for a central, a bank digital currency that if you already fulfilling the instant payment need of anybody, I
Yeah.
mean, of all the citizens. So I guess that's pretty much what in the US was trial from Fed. I think it's Fed now. It's called in the United States. It's a similar service, so meaning that an instant payment service. And there are also other countries in the Nordics and Central Europe I know about that simply have instituted very convenient instant payment interbanking services to exchange money like instantly, from phone to phone, basically that work and already there. So if this is there, the technology has been there for years. There's no need for a CBDC that actually then, yeah, solution. So as I said, I think it's more of a PR kind of exercise plus some ideas of the central banks to do something, but there's not really a market need or a user need for it.
Well, I guess one of the less nefarious views of the reason why the government might be looking at this is just simply they feel like they need to keep up with the times and show they're doing something.
Yeah,
And
could be. Yeah.
I'd much rather they were spending some time looking at how they were going to deal with artificial intelligence and everything that that could mean for the world going forward as that grows and moves. And I don't see them doing anything like that. So yeah, it's I feel like the world is going to change at a pace that we've never seen before. And for me, I like the view of cryptocurrency as a way to kind of not go off the grid, but protect yourself somewhat from the government regulatory systems that issue all the other currencies, you know?
Yeah, that's what we see what's happening in some other countries, which less stable governments, as I mentioned, where the fiat currencies are devaluating very rapidly. That's basically the population turns to crypto, and specifically to stable coins, just and use them because simply their local fiat is not working, and the government is not cannot be trusted to properly manage the country. So stable coins, by the way, I think are one of the biggest, if not the biggest innovation so far with the crypto and the blockchain technologies. Um, because as I said, people in these countries of third world countries, they use their crypto wallet as their bank account, which solves their. So a bank is not giving them an account, but they can get a simply open source crypto wallet, and then they can interact with let's call them stable coins, or that they should be called maybe more like crypto dollars,
Mm.
because that's basically what they are. And yeah, and it solves the debanking problem for those countries, and for the user it solves the issue that, yeah, I want to have a stable currency. That's it. That's what I want. I just don't want to lose money. They're not looking for getting 30 40 50 100
Yeah,
x uh
they're not looking for the investment perspective. It
but,
just solves a very real need that they have.
yeah, yeah, exactly. And yeah, I mean, if you never know what's going to happen in the future. So, but I guess we found something that the governments might not be able to totally control in case of instabilities.
Yeah, absolutely. Um, Peter, the last question I always ask on the podcast is, what does real wealth mean to you?
It's an interesting one. I was just speaking about this. I was on vacation traveling in Southeast Asia, and I think I told my future wife, I said, you know what? Money doesn't buy you better life. It buys you time. So
Mhm.
I think at the end, things you can do faster with money, with wealth. So you don't need to spend so much time on other stuff. So at the end of the day, I would say it's really time. so have time to spend with my family, with my kid, and that's it. So because anyhow, all the money or the wealth that I accumulate at the end, I spend it to more easily spend time, and I exchange it for that. Yeah.
Yeah.
So at the end, I think that's it. And so there's many different ways somebody can be wealthy, um, in sense of spending time and having time for what he likes and he loves or
And
she.
I tend to find with a lot of people that haven't started their investment journey or haven't managed to create any wealth or passive income is they don't even have the time to think about what they would do with the time if they had the time.
Yeah, which brings back to what you said. The worst investment can be an investment that buys you a second job,
Yeah. Well, exactly.
because then you are decreasing the time left for what you love
Mhm.
and so on. So, but yeah, I guess it's a balance between time and the needs of and obligations of the real world.
Excellent. Peter Curk, thank you very much for your time. It's been a pleasure to talk to you. I will link Iconomi to the podcast notes, so if anybody wants to check it out, you can check out the platform and all the services they offer. So, Peter Curk, thanks.
No, thank you. It was a pleasure.
This has been Alex Robertson for the Real Wealth Podcast. Thanks for joining us on this wealth journey.